And moving on, Vivriti Capital has raised a $25 million senior secured debt facility from the Asian Development Bank to lend towards its climate finance initiatives. The 4-year tenor loan is the first by an NBFC, which will be used to expand its green finance portfolio. Now, the proceeds will fund renewable energy projects and the electric vehicle ecosystem. The bond is being certified by the Climate Bonds Initiative, which essentially aims to enhance access to climate finance for financially underserved enterprises, including MSMEs, mid-market corporates, and retail clients in India. Joining me now to discuss this further is Vineet Sukumar, the founder and MD of Vivriti Capital. Vineet, thank you so much for taking time out and being here with us on Startup Street. Welcome back on the show. I've spoken to you before, but you've received this debt financing from the Asian Development Bank for your sustainable finance project, yeah? So Vivriti Capital Climate Finance Project is what the money is for. If you could elaborate on the kind of impact you hope to create via this fund, and how big is your green finance portfolio at this point, and by how much do you want to grow it using these funds?
So our green finance portfolio has built up quite well. We've been doing it now for the last 2.5 years. It's become around 1,500 crores of disbursement or thereabouts in this period of time. Very encouraging results. It's a fairly new ecosystem, so we had to tread carefully, but we have had very encouraging results in the solar ecosystem, the wind ecosystem, the biogas ecosystem, the waste to energy space, the electric vehicle space, the retail financing for such electric vehicles as well. It's been quite encouraging. I think this assistance from ADB is going to go a long way, because it's a great testament to the portfolio that we have built and the fact that ADB could see confidence in supporting us in this part of our business. And I'm quite encouraged that we can at least double the extent of work that we have done in this in the electric vehicle ecosystem and the renewable energy ecosystem so far.
Right. So, just to discuss these sectors further, you're saying that you have seen a great response to this. If you could sort of tell us how you plan to use the funds to support both enterprise and retail borrowers across these segments. What are the kind of companies you're eyeing, and what's the demand that you're already seeing at this point? If you could give us some numbers there.
Sure. So India's entire climate ecosystem has relatively mature parts, less mature, and fast growing, but not proven yet. Right. The first category, for example, is solar power, where we have a lot of history of well-run operators. But even today, the early stage of construction of a solar project lacks long-term project financing, and that's where a player like us could come in. Right. The relatively less mature but fast-growing parts is the electric vehicle ecosystem. That's manufacturing, swapping, charging, as well as distributing electric vehicles of all kinds, two-wheelers, three-wheelers, four-wheelers, going all the way to commercial vehicles and buses, right? And we are there across the entire ecosystem, seeking to build it from scratch, where the risk is around the replaceability of the vehicle after 3 years or 4 years and the battery life. And that's a risk that some players can take, and perhaps the larger market cannot take, which is where we come in. And the least developed is absolutely new technology, right? Hydrogen, for example. Right, where it is a much more forward-looking call, maybe something that not even Vivriti can do today, but it's getting a little interesting for us to see how these models develop, and probably we can play a larger role in the times to come.
Absolutely. And, a substantial portion of these funds, like you said, is going to go, about 30% of it is going to go towards financing the EV ecosystem, right? If you could elaborate on how big the opportunity is here.
So the EV ecosystem is growing rapidly, and it's gone through its trials and tribulations. Right, the cargo three-wheeler segment, for example, is very significantly penetrated. So the acceptability of an electric vehicle is far higher there than in any other segment in the country. Right, the bus ecosystem is building quite well, with a lot of government support and incentives happening city by city by city, and the private sector is responding well. Right. Whereas the commercial truck ecosystem is far less developed. The car ecosystem is going through its own discovery phase of, should we do completely electric or should we do hybrid, right? And there is some work happening there. There is a tussle between charging and swapping. These are two alternative ways of looking at India. And as of now, I don't think anyone is taking a side on which side will become more relevant over the years to come. We have done some work on both sides. Yeah, so the electric ecosystem is looking very, very, very interesting. Finally, there is the retail purchase. An electric vehicle is naturally more expensive on day zero as compared to an ICE vehicle of any kind, 2, 3, 4, 6, 8-wheeler, etc.
Right.
And therefore, financing plays a crucial role in bridging the gap between a borrower aspiration or a buyer aspiration and the cost of the vehicle. So we will play a role in all of these pieces.
All right, so you're looking at playing a role across the ecosystem there. But, you've built a lending portfolio between, both your companies of over 11,000 crore rupees, right, for over 400 clients. So what about NPAs? Where do they stand? And what are the future growth targets? Where's the next leg of growth coming from?
I think if there is one thing that's been very encouraging in the last 7 years of Vivriti's building scale, it's NPAs, frankly. Because the quality of the book is everything for a lender. We've been at under 0.5% of cumulative credit cost since the day we began, and that's a pretty strong statement. It gives a very clear sense that the segment that we are in has quality, and the processes that we are running are able to really find the best of the best within the ecosystem that we work in, which is essentially mid-corporate India, right? And this has given us a lot of confidence that despite funding winter and whatever else the market has gone through, a steep rise in interest rates, we have a lot of growth ahead. My own assessment is that for the next 3 to 5 years, we should fairly comfortably see a 35% CAGR in terms of the assets under management that we run with, and possibly hit 1,500 to 2,000 portfolio companies in 3 years from now, and continue to grow that. India has a base of 19 plus thousand mid corporates that we can actually access. So even 5 years from now, even if you are very, very successful, we will still be only at 1/6 of that market. So that gives you a sense of how far we have to go.
Right. So big, huge growth opportunity there. All right, Vineet, thank you so much for taking time out and being here with us on Startup Street.
Take care.
Okay, on that note,